Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in this special video, we are going to be understanding about what to expect from RBI's big policy meet outcome tomorrow. The Monetary Policy Committee will be meeting for the first time of course, it's met from 7th of April up until tomorrow, and tomorrow is when we finally get to see what will be the decision of the first policy outcome of the RBI's Monetary Policy Committee for the new financial year, that's 2026. Remember, a lot has changed since the last meeting of the Monetary Policy Committee of the Reserve Bank of India. On the positive side, we have actually seen that inflation has eased and growth has actually started to pick up pace as well. However, now there are rising concerns over the economic fallout of the trade war triggered by US President Donald Trump's tariff policies. The big question is, will Trump's tariff war tantrum push the Central Bank of India towards a rate cut, and a deeper one at that? As the RBI's Monetary Policy Committee meeting outcome approaches tomorrow, experts are already speculating whether India's central bank will actually implement a deeper rate cut to support the economic growth amid the rising trade tensions. Let's first recap what really happened at the last meeting before we come to the expectations of tomorrow's meeting. Now, in the last policy meeting in February of 2025, we did see that India's central bank had cut the repo rate by 25 basis points for the first time in nearly 5 years. But they did keep the monetary stance to neutral. Now, the RBI Governor Sanjay Malhotra did indicate in his first ever policy that inflation was aligning with the target. Remember, India's inflation has fallen below 4% now, and that's at a more comfortable zone for the RBI to look at. The consumer price index based inflation, or the retail inflation as we call it, came in at 3.6% in the month of February. What we've also seen is that the March CPI data will be released on 14th of April, so that will come in after the policy announcements. Now the question is, what will happen in tomorrow's outcome? Remember, with the retail inflation now at a comfortable level, speculation has risen whether the RBI may actually look at more growth alignation at this point in time and may actually look for a rate cut. However, experts do believe that the RBI may actually not pursue a deeper rate cut at the current juncture, considering the heightened uncertainty that's caused by the trade war. Experts do see the RBI to cut the repo rate tomorrow by at least 25 basis points this week, as most of the economists are predicting. As inflation has been brought under control, rupee has also begun to strengthen again, and this gives the RBI more room to support growth. But the RBI commentary on inflation outlook and growth outlook will be key to watch out for, as both these factors are also now staring at the uncertainty caused by the trade war. What could be the inflationary impact of trade war, as most of the countries are now looking at retaliatory measures to the tariffs that were announced by the US President Donald Trump. Look at China. China is going all out in a retaliatory fashion. They have said that they will be also looking at a retaliatory measure on tariffs. They're also talking about how to put a stop on Hollywood films in China and many other such instances. Spain and Europe has also started to talk about that they are laying down all the retaliatory measures on the table, whereas there are some nations which are actually going for a more neutral and negotiatory approach, like Vietnam has said that they will be looking at reducing their tariffs to Chinese imports, to American imports as well. Now remember, in February this year, the RBI's Monetary Policy Panel did cut the repo rate for the first time in 2 years. The second cut, if expected, in tomorrow's meeting of 25 basis points, could actually bring down India's interest rates to a 3-year low as well. Now, India's economy has already likely expanded about 6.5% in the past fiscal year. This is the weakest pace since the pandemic that we have seen in 2020. And also higher than expected US tariffs now risk further putting pressure on this growth outlook. Now, economists have already begun to lower their own growth projections for the world for the current fiscal year, as Goldman Sachs also now has predicted 6.1% expansion for India as compared to 6.3% earlier. this 6.1% of expectation for India's GDP for FY26 is far below than RBI's 6.7% estimate as well. So that's something that we need to watch out at, not the FY26 but FY25, which will now come in. Now remember, a few analysts also expect the 6-member Monetary Policy Committee to change the stance to accommodative from neutral earlier as well. This, if it happens, will indicate a more growth supportive outlook for the Indian economy. Remember, the new central bank chief, Mr. Malhotra, has already pivoted to a more growth friendly approach than the earlier predecessor of Shaktikanta Das. He has cut rates for the first time in 5 years in his first policy meeting in February, and has also injected more than $80 billion into the banking system in the last 2 months alone. Remember, there is an expectation that the RBI could actually extend its record cash infusion to perhaps put at bay all the global risks that are mounting in front of India. India's below target inflation last month, lower oil prices that are now happening will also give another reason to the RBI to stay with looser policy settings. In the last few months, what we've also seen is that the Monetary Authority has been proactively injecting this liquidity through various tools like bond purchases, forex swaps and variable repos as well. That has helped turning the banking sector liquidity to surplus for the first time in more than 3 months. And it has also erased one of the worst cash crunch which was being faced by the financial system back in the month of January. Mr. Sanjay Malhotra's commentary on liquidity will also be very, very carefully looked at for any signs of further policy easing beyond tomorrow as well. But all eyes will be on the RBI governor tomorrow at 10 a.m. when he finally releases his comments, the first policy in FY26, the first one post Trump's tariff announcements and his own second ever policy. The first one was a landmark with the rate cuts announcement and the liquidity measures announcements. Let's see whether that continues to be the focus and what he really says about the impact he believes can the economy see because of the tariffs as well. All the comments on tariffs will also be extremely keenly watched out for tomorrow. Hope this has given you enough and more clarity as to what to expect tomorrow at 10 a.m. when finally you get to see RBI's Monetary Policy Committee statements come in. Well, we will handhold you in case you're still in doubts and you want to understand that better tomorrow with all the coverage around the RBI. So stay tuned. There's much more for you to really see even beyond the stock market hours and RBI coverage on your screens right after this.
From Washington, D.C. to Seattle, Boston to LA, an estimated 500,000 Americans marched under